Hello, I'm Lelda Smits for the Finance News Network, and joining me today from Australian property data provider RP Data to discuss the outlook for Australian property over 2014 is Craig MacKenzie. Craig, welcome back to FNN.
Thanks, Lelda. Good to be here.
RP Data reports Australia's combined capital city values jumped by 8.3% over the year to November. Was it a bigger or smaller jump than you were expecting?
Probably on the bigger side, Lelda. It was really driven by Sydney. Sydney saw a very, very strong growth in property values, particularly in the second half of 2013, with growth at about 11% for that past 6 months of the year. So probably on the higher side, the 8% for the combined capital cities.
Now, you mentioned Sydney was behind a lot of those gains. Were there any other significant drivers behind that price jump?
Well, Melbourne also saw strong growth in 2013, not to the same degree as Sydney, but again, being a larger capital city, it contributed strongly to that 8% capital city number you mentioned. So Melbourne was also on the high side in terms of capital growth for the year, and also Perth was a strong performer, although it tailed off towards the end of the year. Perth saw growth at about 6% for the year of 2013.
Moving to interest rates now, as they fell, property prices rose over the year, fueling talk that we may be in a property bubble. Do you believe we are in a property bubble or even at risk of entering into one?
No, we don't believe we're in a bubble. That question is asked quite often, but no, we don't. We see good, sustainable fundamentals in the Australian property market. At risk, certainly regulators have pointed out the risks of a low interest rate environment in people over borrowing. We think there are very many checks and balances in the system that would prohibit the market becoming too overheated.
So with the key cash rate sitting at a record low of 2.5%, where do you see it heading over the next year?
Interest rates, I think, we see we're at or near the bottom of the cycle. Potentially, I think the Reserve Bank will sit on its hands for the first quarter of 2014 and then reassess.
And where does RP Data predict property prices will head into 2014?
I think to see a rate of growth of about 8 to 10% across the combined capital cities in 2013 was particularly strong. Our expectation would be a more refined and measured rate of growth in 2014, particularly partially around the 5% sort of level. That would be reflective of a more measured rate of growth in Sydney, in particular, which drove that higher number in 2013. There are a number of factors that we believe will feed into that more measured rate of growth in 2014.
Most capital city markets sprung into recovery mode in 2013, dominated by Melbourne and Sydney, as you mentioned. So which cities are the best positioned to perform in 2014?
I think one of the best performers for 2014 is likely to be Brisbane and South East Queensland. That market has seen some modest growth over the past few years, and I think now the fundamentals there in terms of population growth, housing supply and rental yields are all very strong. I think some confidence is returning to that market in particular.
And are there any interesting markets RP Data has identified which may be set to change from evolving conditions over the next year?
So two of the interesting markets to keep a close eye on in 2014 will be Sydney and Melbourne. As I mentioned earlier, both of those markets, investors have played a key role in driving the growth in 2013. As a result of the growth in values in those markets and the fact that rental prices have stayed flat, we have seen declining rental yields, particularly in Sydney and Melbourne. So that will be an interesting dynamic to watch in 2014 to see the extent to which investors remain attracted to those markets.
Finally, Craig, which markets will be the surest bets in 2014 and what factors may be some wildcards for property investors?
Interestingly, the markets to watch in terms of risks will be parts of Melbourne and Adelaide associated with the manufacturing and automotive industries, which will see some pressure potentially in 2014. The inner city apartment market in Melbourne in 2014 will be one to watch closely. We've seen some elements of oversupply in that part of the market. And Darwin market is always an interesting one. There's always plenty of volatility in that market, up and down. So there's some real dynamic happenings in the Darwin market in particular.
Craig MacKenzie, great to speak with you again, and thank you for the property outlook for the year ahead.
Thanks, Lelda.